All right, everybody. Scott Stevens here. As we're going to do a little another perspective. We're going to talk about digital currencies. If you dropped in on Monday's show, we talked about alternative currencies and currencies in general, as it's becoming apparent with this COVID crisis, with like 12 years since we went through the last debt crisis, that there's some issues that were not resolved then that need to be resolved in the very near future. And so we'll roll on to that. We'll roll the open, and then just we'll be right back and dive on in. All right, see you. All right, looks like we're clear there. We've got the mic up and running, and there's the full-on show. I was kind of hoping just to start like that and have a little chit chat before we go. Currencies are a big part of money, and as we talked about on Monday, I've always been fascinated by investments, and probably more to the point, numbers. Just numbers. I've always liked numbers, and that was two things that gave me numbers to play with: was weather with highs and lows and averages and normals, and basic arithmetic. And then the other thing that kind of got me interested was money, because that's always a little interesting as well. I'm hearing some sounds, and I might definitely have a window open because we've been on the warm side, so I'm hearing neighbors over there. You may be too. But what I'm oh my goodness, this is going to be something else. Then I might turn down this just just a little bit, and and go for it. All right, so let's talk about currencies. Go figure, huh? Go figure. That's just how it works. We don't have a straight a proper studio. It just kind of, you just make do with what you've got, especially when we're in the little pandemic business. How does it sound, Vicky? Is it just crazy? Because it sounds like somebody's got a grinder out there, and yeah, that is the window with the fan right in there to keep all this gear a little bit on the cool side as we stay hot. So, all right, we're gonna come back and share screen. Let's do this, baby. So we're going to start with digital assets. That's what had me fascinated. After 9/11, I kind of dove into gold, realized that on my weatherman's income, gold was going to be something that was going to be a bit of a challenge to accumulate. And that's really what I wanted to do. I wanted to accumulate. I wanted to build something up to where it could be a nest egg. And at that point, I was 33, 34 years old or so. So retirement wasn't nearby. But if I didn't do something above and beyond what was the company's 401k policy, that I would probably not be able to live the kind of life that I wanted to. So I needed to accelerate that process. And so it does sound like a grinder, Vic. It absolutely does. And so I needed to dive into something else. And so I kind of chose silver eventually. And then when we had the financial crisis back in '08, that didn't happen either. Those assets were controlled by the powers that be, because God forbid gold go up or silver go up, because then that would indicate that, hey, folks, in the fiat world, we have a problem. And that's the last thing a game of confidence wants to do, is admit that it has a problem. Otherwise, confidence is gone. And even then, you can bullwhip, you can corral, you can coerce, and you can force people to stay in the corral, in their game, as long as you've got those tools. And they've had at that point in time nearly 100 years worth of owning the reserve currency and managing the dollar bill, so they were able to print enough money, inflate the money supply enough to take the heat out of the system. So it was kind of a bit of a struggle. Yeah, Vic, I am a monster when it comes to silver. That is truly my favorite. And Karen, greetings, good evenings to you that are coming in from afar. So as we we're looking at digital assets, and in some ways that can even mean dollar bills. Why? Because they tend to be digitized, and that's a part of what's going on. Even your credit card payments, those are all digital right now. You don't go into the merchant, you don't present your card, and they don't roll it across the machine, take an imprint of the card, and then submit it to the credit card processor, and then it ends up as a balance against you. Days down the road, things are happening much more quickly. There are other different kind of digital assets as well. And Vic has talked about some of those in her programs. Those could mean images, photos, videos, files containing text, spreadsheets, slide decks, new digital formats are constantly emerging. The beautiful thing about this field is that our creativity has been freed. MP3s were unheard of before the 1990s. Even though we had CDs, it was a different format. It was the ACC format, and those were much larger in size. And so computers and digital signal processors, DSPs, have allowed us to compress this data so it takes less bandwidth. And even in the 90s, I remember my first computer modem in 94 was a 14.4 kilobit per second modem, 14.4. And of course, you had to surrender your dial-up phone line, your analog phone line, to use the modem, and then beep, beep, beep. Oh, he must be on AOL right now. Things have changed. So photos, videos, slide decks, Excel presentations, graphics, all kinds of things are digital assets. And then to get a bit more specific, digital asset management, editor Ralph Windsor defines digital assets as a collection of binary data which is self-contained, uniquely identifiable, and that is key. And that also gives it value. Binary data is the only form of data that can be directly understood and executed by a computer. So this is the defining feature that makes a digital asset. This leaves us with three defining digital characteristics that qualify as a digital asset. It is digital in nature, by definition. It is uniquely identifiable, and it provides value to the company or to the owner of that asset. So we're going to come back and look at dollar bills. It used to be paper, completely paper or coin, as it were, until we had banknotes that came along. So in the 1970s, but mostly the 1980s, when ATMs began to roll out and the internet was, let's just say the banks and the bank networks were then connected to the internet, that made the ATM possible, and that truly began to digitize your assets. Good morning, Tracy. And Karen, digital assets can be valuable. And as Vic has often said, we often don't realize the value of those assets that we already have in possession. So as we have gone from the dollar to the euro, the yuan, and the pound, according to the International Bank of Settlements, the preliminary global results from the 2019 triennial central bank survey of foreign exchange and OTC derivatives markets activity shows that trading in forex exchange markets averaged $6.6 trillion per day just a year ago in April of 19. And that had grown from 5.1 trillion in April of 16. So what we're learning is that you could not trade that kind of value if we were dealing with paper bills, if we were dealing with physical gold and silver. So it is truly the digitization of money, of currency, of this exchange of value that has just blown up and allowed these markets to literally grow. And just to give you a perspective of the size, New York Stock Exchange, 28 billion exchanged daily. This was 3 years ago. 191 billion on all of the equities markets, and the futures markets even larger yet at 437 billion, or not quite a $500 billion. But then there's the foreign exchange markets, wickedly popular, and we saw the earlier numbers where we were at 6.6. So that's a year ago. So then we look at currency, and why would we need a digital currency outside of the fiat currencies? That would only arise if there was a need that was potentially anticipated, and someone who discovered, felt the need to then go through the work of conceptualization and then making the thing real. And usually that doesn't happen with a single person. So digital currencies have come on the scene, not recently, but ones that are outside the purview of sovereign nations and central banking. That is what makes them new. So the irony of Bitcoin's Genesis block, or the first block that Bitcoin was mined or created, brought into existence, the root problem with conventional currencies is all the trust that is required to make it work. The central bank must be trusted not to debase the currency. But the history of fiat currencies is full of breaches of that trust. This is Satoshi Nakamoto, the pseudonym for the man who, through some help with some other folks on some cryptographic bulletin boards, came up with the code, and they all kind of agreed it was brilliant code. But he published this on February 11 of 2009. And then in that Genesis block, he encoded, so it would be forever written down, Chancellor on the brink of the second bailout for banks. And that's kind of curious. So then the question is, what is currency? What is currency? And we kind of got into that on Monday, but it's simply something that you can change. Well, it's a form of barter. It's a barter. I would like this in exchange for that. And when the two parties come into agreement, then the exchange can happen rather flawlessly, without argument, without any disagreement. When you use a bank, there has to be a third party. You give your money, you write a check, it goes through to the bank, they make sure the funds are on your ledger, and then the funds are then transferred to the recipient's bank or ledger. With Bitcoin, it's a whole nother ballgame. You send a bit of code encrypted off to a whole slew of computers. Look at all these little guys, all these power units, and then there's cards attached to them, and they're all running the math. They're all looking to crack the next block or encrypt all of the transactions that have happened within that 10-minute block time. So that only came up because we're going back to the Chancellor of Banks needing another bailout. As in Britain, through the financial crisis, they were having to debase their currencies. So the Fed has literally gone crazy, and the question now is becoming, is the dollar doomed? And this point is even more relevant now that we are in pandemic land, in COVID land, where I believe it was this last May of 2020, when the federal budget deficit was $896 billion. I remember growing up, and that first whole year trillion-dollar budget was sometime around the end of the Jimmy Carter era, so late 70s. So it's only been 40 years when all that the government spent in 1 year was less than $1 trillion. And that was our debt inside of 30 days. So that means that the value of the dollar has got to be in question. So we look at the money supply. Let's look at these zeros. That's hundreds, thousands, millions, billions, trillions, $2 trillion. Back in 1960, so the money supply was much, much smaller. So far fewer dollars out there chasing homes, chasing cars, chasing employees, chasing gasoline, chasing food. Less dollars meant things simply cost less. And so the target for the Fed is an inflation rate of simply 2%. 2%. Can you believe they've actually accepted that 2%? So over the course of a decade, your dollar bill is worth a guaranteed 20% less. So you've got to be looking for some investment that will exceed this targeted 2% aspect of inflation. And they only need inflation because they need more debt creation to then pay off the debts that they've incurred running a government. So inflation back in the late 80s, when I kind of came on the scene and got interested in economics, was 7, 8, 9%. I remember my parents, not their first home, but the first home we built, and I was old enough to realize what was going on, they got an 8% FHA loan. So right in here at about 8%. Right now, that would make so many people's home mortgages just simply unaffordable if they had to pony up for 8% interest, when right now you can go in and get, at least you could before COVID, a 3.25%, 3.5% interest rate. So every 16 years at 8%, you're looking at nearly a doubling of your expenses. So here we are back down to the 2 to 3% target range, and they've held a little bit close to it. Some years, more recently, we've seen deflation, and that is largely a function of probably energy prices. So how do you protect yourself from COVID? Well, toilet paper. And this is literally the joke, that with the need to assist so many people, that we just create dollars, and we create pounds, we create benefits to go out to the people. And the United States alone, I believe we're coming up on $4 trillion. $4 trillion, which is it's one annual budget. It's just been created since March, April, and here we are towards the latter part of July discussing when Congress gets back in session, what to do, how do we help the people, and that is simply becoming what is MMT, our modern monetary theory. Or in Ben Bernanke times, just 10 years ago, it was called helicopter dollar. So from the central bank, they print the money. The government has to go into debt. Those treasury notes then go to the Fed. The Fed then gives the government back the money, the dollar bills, and then we end up paying the Fed interest on that, which is, in my eyes, unconstitutional. And then the money goes up into the helicopters and then spread out. It may end up as a direct deposit in your bank account or something else. Yeah, crazy graphic, isn't that, Robin? And then you also commented that since most haven't had a 2% raise for the last 8 to 10 years, we're losing money every year and working harder and harder. And I see it that this is why we have to have two incomes now. We're back in the 50s, even into the 60s. You could get by with one household income earner. My dad used to work, but by 1974, mom had to go to work. She just walked down to the street and at the local Holiday Inn, she was a waitress. And that was one of her few out-of-the-house jobs that she had while I was at home. But nonetheless, that was a function of inflation, and that was part of the oil crisis. So, one U.S. gold coin in 2020 worth about $1,770. Today, it's between $1,810 and $1,820, so it's gone up a bit. In 1 ounce U.S. gold coin in 1933 was worth $20.67. So this was the standard exchange price. This was a set price. We didn't have the free floating price of gold. We didn't have what we term market price discovery. So let's do a little math exercise. I did this last week and needed a place to share it with you. So titled it, What's a Penny Worth? So gold in 1933, $20.67. So there are 2,067 pennies in that ounce of gold. So if we take today's pennies and then, all right, let's tell you what will a gold penny be worth today. So we take the 2067 times 100 and then divide by today's price of $1,820. That gives us one gold penny worth $1.14, nearly $1.15. That means a penny in 1933, the value of a penny will buy $1.15 worth of goods today. So 3 cents will get you a loaf of bread. 2.5 cents will get you a gallon of gas. That is how far the value of the dollar has fallen versus something of intrinsic value, in this particular instance, gold. But the wheat and bread and gasoline and energy all has a value. And those things have all gone up in value because there's a pile of money out there looking for goods. So why? And that's simply the inflation of the money supply. So what we're up to is this new digital currency. Can it break the banks? Is that a possibility? May that be an end run that man in its ingenuity has come up with to get around the bankers? So digital currencies, it's a currency payment method that only exists in electronic form. It is intangible. It's fast, automatic transactions, much, much faster than other systems. You may go to your grocery store, you swipe your debit card, you put in your PIN number, but your grocer does not get paid on the spot. It is waiting for that debit to then show up in the bank. They clear the ledger. It may be as soon as 24 hours, but more likely 48 hours before that merchant gets paid. When you're dealing with cryptocurrencies, the currencies that have the faster block time, in particular Bitcoin, is every 10 minutes. And that means everybody gets paid or debited, if they're doing the spending, every 10 minutes. I do a transaction right now, it's 6:19 my time. The other person will have had a confirmation, and that money will be in that person's account in 10 minutes, and there's no way it can be called back. So it's an immutable form of transaction. It is cheap, absolutely cheap. Transaction charges are much, much lower than credit cards. You're guaranteed, the merchant is guaranteed to lose 2 to 3%, depending on the volume of exchanges when a person uses a credit card, less with debit cards. Secure from hackers, personal data is not needed, and global, you can send money anywhere. It could be to Tracy off in Australia. Boom, paid very, very that much quickly. So Bitcoin users don't need the existing banking system, it is irrelevant. The currency is created in cyberspace when so-called miners, we saw the pictures of all those computer power supplies back there. Yeah, that's what those are. Those miners use the power of the computers to solve complex algorithms that serve as verification for these Bitcoin transactions. The reward is payment with the currency. So these miners get rewarded if their computer, if their farm of computers strikes the code, encrypts the transactions, and then is accepted by the system, then they get the reward blocks for that 10-minute period. So every 10 minutes, somebody is getting rewarded for putting their computer power to work. So if Bitcoin or other cryptocurrencies become widely adopted, the entire banking system could become irrelevant. This is from Forbes. While this may sound like a wonderful concept in light of the recent behavior of the banking industry, do you really think they're going to change? There are two sides to every story. Without banks, who will you call when your mortgage payment gets hacked? Well, your mortgage payment wouldn't get hacked if we were all on the blockchain. We'll get to that in a minute. How will you earn interest on your savings? There are ways to do it. And if the banks are only paying 0.5% on their passbook, then this is really, really a moot point. Who will provide assistance when a transfer of assets fails or technical glitch happens? Well, that just doesn't happen with Bitcoin. It's kind of out of the thing. All right, so when we look at Bitcoin and cryptocurrencies, we often see these graphics in the shape of coins, when in reality, as we discussed earlier, it's completely intangible. You can get coins which would have an address inscribed upon them along with a key, probably not on the coin but separate from, just for security reasons. So it is a completely intangible asset. So dollars are backed by government decree versus Bitcoin backed by cryptography and energy. Energy is the key. That is the expense. When miners go out and mine gold, when they mine silver, whenever they mine anything, it's an expensive proposition. You've got to have hardware to go out and mine. The same is true with Bitcoin. Robin's over here, but I was under the impression that there was a limited number of cryptocurrency and Bitcoin specifically. What will work when we hit the end game? Yes, this is true, and we'll get to that point, but you can still earn interest. There are ways to deposit your Bitcoin and systems and then lend it out. And right now, the payment rate is between 8 and 10%. You lend your Bitcoin, somebody borrows it, and then will use it as a hedge in the market. They will borrow it to sell it long or to sell it short. So there are ways to leverage an asset that you already own and to earn interest on it day after day after day. And Bitcoin is not the only currency that you can do that with. Ripple, Litecoin, and some of these others that have real world functionality, you can lend to these guys and earn interest on it. And in a way, it's almost silly not to be doing that to guarantee yourself some kind of an income. Okay, back to fiat. Although there are holograms and seals, it is possible to counterfeit the dollars. Fiat currency can be printed at will until it eventually becomes worthless. That seems to be the road that nearly every government will go down at one point or another. Few retailers will give you discounts for just paying with fiat dollars. And fiat dollars are forced upon us at gunpoint, legal tender wars, and you're extorted in fiat currency to pay extortion fees or your taxes. So Bitcoins are limited to a fixed amount. Many retailers are actually beginning to give discounts to customers paying with these products, because there is not much of a transfer fee and also the appreciation of the currency. All right, talking about counterfeiting. We had U.S. Customs and Border Protection just this past month said they seized more than $351,000 in counterfeit $100 bills in Milwaukee. They kind of look real and then kind of not. Agents said that the fake bills were shipped from Shanghai, China, and headed to a residence in Milwaukee, and all the shipment contained that 3,500 bills, totaling $351,000. Investigators said the fake money was made of poor materials, missing required watermarks, and had no red or blue embedded fibers. Each bill had the same serial number, and there were Chinese letters on the back. It's almost like it was a joke, that it was just that bad. So, because gold is a physical asset, and this, as Vicky mentioned earlier, gold has, let's just say it was, and continues to be the example for these cryptocurrencies. It takes work to discover gold, and booms usually happen like the gold boom, the silver boom, the California gold rush, because people are really mining money. It becomes a useful and proper medium of exchange. Good to see it popping in there from Thailand, Michael. And so gold is heavy, it's rare, and it remains a high value target for thieves or for miners. The cost of securing a digital asset is far less, nor is a digital currency as likely to be sanctioned by the global banking cartel. Though with Iran, we have seen recently some Bitcoin addresses have been highlighted and potentially targeted for movement of funds. And then this will eventually introduce us to the role of privacy coins. And these privacy coins would be the cash of crypto. So the reason I'm bringing this up is because of Venezuela having been under sanctions from the states for quite some time. It must be because somebody would like their oil. That seems to be the reason why most wars are fought, is for that black gold. And so because they have been unable to ship their oil, to refine their oil because of these sanctions, Venezuela wanted its gold back. And London eventually said, nope. So they didn't get their gold back. So what we'll end up with is probably the commoditization of cryptocurrencies. And we've seen a lot of companies say, hey, I want in this ballgame. This baby works. So we're going to likely see big governments kind of push back. We saw Libra, and we'll get into that into a moment. Well, but let's just do this. Big governments and central banks want to kill Libra and Bitcoin and eventually all cryptocurrencies. Yeah, why wouldn't they? They are official and unofficial reasons for this. The official reasons are well known. They range from national security concerns and investor protection to liquidity, and apparently are well justified, according to Lars Sear Christensen, chairman of Concordium, the world's first ID and Know Your Customer, KYC ready business blockchain network. Libra, which was a Facebook concoction idea. I don't know exactly where it is because it's been kind of short in news lately, but Libra is supposedly going to be backed by safe assets such as money market instruments, fiat currency, and short-term government bonds. So what they're taking is fiat and loading up the truck, bringing it into the bank, and then Facebook would then print Libra against that pile of regular fiat assets. And then it would be tied 1-to-1. So you'd have a stable coin. And you could see how this could be really, really alluring for nations that are going through currency crisis. Argentina, Zimbabwe, the list goes on and on. So the Libra consortium would need to liquidate fast, for example, in the case of a run on the currency. And this has happened in much smaller currency or money market funds that broke the buck. And that was more back in 2008 and 2009. And then there are technology issues, but so far it doesn't seem to be anything that really can't be overcome in a short period of time. Yeah, right? Those don't seem like safe assets. And that's why this whole thing is kind of happening, is because we've realized that if we're guaranteed a 2% loss on the dollar bill or more, and because we've got so many dollar bills all of a sudden in circulation, there are problems coming. I guarantee you there are problems coming. So Bitcoin price back in the beginning when the first exchange happened was 8, 9, 10 cents. That would have been a really good time to own it, but we had so many people that bought it and just didn't see. Well, I think they probably did understand what it could become, but that's some point in the future. And so we get sloppy with how we take care of our cheap assets. We let them go. And so it surged to 16 cents, kind of came back all the way back to $4. And then as time went on, the community grew and so forth and so on. And right now we've flattened out and just have gone through a halving. We flattened out much closer to the low $9,000 range. So that's not too bad in 10 years' time. So what is it? We kind of went through what it is. Transactions are made to and from 16-character encrypted addresses. So capital letters and numbers, a combination of letters and numbers. These addresses are mathematically secure, so only the algorithm can read it, but the owner of the address can transfer the funds that belong inside that address. To be put simply, Bitcoin is a network of independent computers that generate, propagate, and verify monetary transactions. So before you can buy it, you've got to install a wallet or software on your computer, or an app is kind of where it has evolved to. The wallet will allow you to send, receive, and transfer Bitcoins. Then to buy it, you would have to deposit money into an online exchange that connects Bitcoin buyers and sellers, and then they would act as the market maker. They would have the pool of Bitcoin. A little fiat comes in, $10, $20, $100, $20,000, $200,000, doesn't matter. The money comes in, and they would set aside that kind of Bitcoin for you and then send it off to your wallet. Once the exchange has accepted your currency, you can then place an order for Bitcoin just like you would buy stock. It's incredibly simple. So kind of a replacement. So the laws are variable depending on where you live. They truly are. There are some nations where it remains the Wild West, and others where it is exceedingly regulated. China was one of those in the beginning where it was the Wild West and a lot of money poured in. And then the CCP eventually just tried to shut it down. They're really trying to rein it in because it would threaten their stock market. It would threaten their real estate investment, and it would threaten their currency as a whole. And that was not a risk that they were willing to take. The other thing are Bitcoin ATMs. You can see those slots for dollar bills. You get a printed receipt with a QR code. And for me, in my experience, your premium is a little higher than I'm comfortable paying. It's between 6 and 8%. That is a little bit high. So again, there'll never be more than 21 million Bitcoins in existence. That's less than one Bitcoin for every millionaire in the world. Think about that. Bitcoin is digital gold. It is not digital gold called it for no reason. It offers very similar qualities to gold while improving upon it at the same time. Much cheaper transport, digital verifiability. What is fascinating with gold is that they're finding 1 kilos and all kinds of gold bars that are literally gold plated, but they're tungsten, they're copper inside. So it looks like it's all shiny and it's all gold, but literally it's counterfeit. And there have been some Chinese companies that went bankrupt within the month because they had pointed up gold as collateral for loans. And when the loan got called because of this economic slowdown, and when they went to assay the gold, it wasn't gold at all. And so these companies eventually failed, and then there's an accountability with the CCP for the companies that have pulled off the fraud. Bitcoin is incredibly easy to store. It can either remain on the exchange, on an app, in a wallet, and so forth and so on. And it does have a much smaller impact than, say, literal gold mining. Here are a couple of companies, eToro and Coinbase, SEX and CEX is a centralized exchange, and then CoinMania, good trading interface, and Coinbase is applicable, and their fees are very reasonable for some 40 countries. Coinbase is very, very simple, and they keep you compliant with the nation's individual laws. So never in the history of Bitcoin's existence have so many positive price catalysts come together in such a short period of time. And so this is kind of where we are. We're seeing the economy completely financialized, and what history has and repeatedly teaches is that fiat currencies eventually fail time and time again. Digital currencies are maturing in their ability to act as safe haven assets, and that's what we're all after. Safe haven assets. Why would you want to own Apple when their sales are down 40% and their stock at a record high? Why would you want to own Tesla when they can't even maintain the quality of their vehicles or they can meet demand now because that's kind of fallen off a cliff. You know, you've got IBM and you've got General Electric, all of these incredible, what would have been Dow companies, that their debt load is greater than the income that they earn in the course of a year. And there's great question now about whether these companies will ever be able to get out of the debt that they've put themselves in, especially since we do not yet know the magnitude of the slowdown of the world economy. That remains the big question. So digital currencies act as safe haven assets, as a rapid and secure means of exchange, and probably the gold standard for the ease of accounting, and then being able to deliver integrity within accounting. And if you look at governments and the shady things that can happen on their books, this, to me, is a massive selling point. Therefore, cryptocurrencies deliver financial accountability, and in my opinion, that's exactly what the world needs today. So yeah, Vic, is the debt's going to blow up, and we're interesting because we're at the end of the second quarter right now, and we're beginning to see companies reporting reporting their numbers for the quarter. Some will do okay, and others will declare bankruptcy. And then what happens to the corporate holders of those bonds? And that goes directly back to the financialization of all of these markets. There's been too much money in the way it has been. And the banks have gamed the game to their favor and to the detriment of the companies that are borrowing and also to we citizens. And they've had a very, very cozy relationship between the companies and the banks, and then also the governments, which have explicitly allowed this game to happen. So, yeah, they appear to be safe haven assets, and like silver, like gold, looking back from a year from now, these are going to be viewed as super stupid, if not stupid, cheap assets to jump on into. So come on in there if you want to talk to us about it. Hit us up in the Facebook group where we can take your questions and answers and something a little more personal. We obviously can't offer financial advice, but just share with you what we have done in the past. All right, everybody, thanks for dropping on in on this evening. Have a great night, and it is a big, crazy world out there, and just as scary as it seems, there's probably just as much opportunity out there if you can just see behind the curtain. All right, everybody, have a great evening. We'll see you soon.